Property Tribes TV is now on the Filed Tax Accountant stand, and I'm joined by Stephen Fay, who we all know as the Property Investors Tax Accountant. So welcome, Stephen.
Thank you.
Now, obviously property is a specialist area for you in the tax world because you're an investor yourself. How much value do you think it adds to what you can offer because of your understanding, your intimate understanding of being an investor yourself?
Well, I like to think that because we're property investors ourselves, we've got not just the technical tax knowledge that you'd expect an accountant to have, but also that investor's mindset.
Yes.
That enables you to sort of tap into what investors are trying to achieve, and make sure that we're fully up to date with all the sort of tricks of the trade, if you like, and ways of doing things that enable you to keep more of your property profits as a landlord or a developer, which is really what everybody at the show today is trying to do, is make money out of property. And of course, with a top rate of income tax of 50% currently, there's an awful lot of tax that can be lost without any good tax planning being in place.
Now, obviously, HMRC often say that they're sort of targeting landlords. Is your experience that they are actually, I believe last week they announced that they set up some new task forces specifically to look at people that were not filing their tax return. So what would your advice be to a landlord or property investor that doesn't have their tax affairs in order?
Well, I think that the first thing to say is, of course, is that there is a requirement for you to declare your taxable income in this country, and the tax regime for investors and developers, I think, is actually quite generous in this country, and there are so many allowances and reliefs and claims and expenses that can be claimed legitimately that quite often clients that come to us are sort of apprehensive about what bill they might get at the end of the process. They're pleasantly surprised. But you're right in that HMRC do have various ways and means of picking up investors and developers that are not declaring their property profits. There's actually a new computer system in Worthing in East Sussex that has been developed that is able to track the land registry database against the tax return database, and so if you've made a sale of a property and you're not on the tax return database, you might get picked up for review.
Well, that's worth knowing.
Yeah, and that's probably the chief way that the revenue find people that are not declaring what they ought to be, and then that can be quite a painful process if you're subject to what's known as a discovery assessment. In other words, you didn't come clean, the revenue found you, and the tax penalties for discoveries are up to 200% of the tax due. So it can be expensive if you're evading tax.
I think if your tax affairs are not in order, some people can be a bit like an ostrich and bury their head in the sand.
Yeah.
But ultimately, I think it's better to take a pragmatic view and say, okay, I need to get this under control. I need to come to somebody like you to help me bring myself up to date and make sure I'm fully compliant. And that's actually going to be less painful than being investigated.
Yeah, definitely. And in fairness to the revenue these days, they are a lot more open to negotiation, particularly where there's incomplete records and there's lack of information. And it's part of our role as your accountant to negotiate with the revenue on your behalf and do our best to mitigate any penalties. And the revenue are looking for people to get into the system, so that they're not the sort of men in black that they perhaps used to be. We've got quite a few clients recently where the first task was to bring their affairs up to date and contact the local office for a meeting to explain the scenario and negotiate a reasonable result. And revenue are open to that sort of arrangement these days.
Fantastic. And just with regards to your own portfolio, are you in buying mode? Are you in consolidation mode?
A bit of both. We've sort of been through our sort of major buying phase. So a lot of our work at the minute is about bringing our portfolio up to scratch in terms of running it as a true business. So we've recently been working on a website that tenants and tradesmen can use to report maintenance and to view properties and this kind of thing. But we operate in a particular area, and if a property comes up that we think is a good one for us, then we're always sort of buying at the right price, as every landlord should be. Particularly now, as you know, a lot of properties are cheaper than they've been the last few years, and you know, there's some bargains out there if you can, you know, raise the finance and you know, take advantage of that.
And you're based up in Fylde, which is near Blackpool.
We're based near Blackpool on the Fylde coast.
Yep. But you travel to see clients all over the UK, don't you? So it's not specific to that location with regards to your tax, your accountancy.
Absolutely. Yeah, we've got an office in Moorgate in central London, so we service our London and South East clients from there.
Brilliant.
We operate mainly by email and phone. I like to meet everybody so they know who they're dealing with, and yeah, it seems to work.
Brilliant.
Yeah.
Well, thank you so much for talking to us, and you know, we so value your input on Property Tribes, and I know you're really, really busy, and I know you can't get on there all the time, but whenever I see that you've posted, I always read what you write, because I really respect your judgment on this, and thank you very much for being part of our community.
You're welcome. All the best.